Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour show. We are here to talk about stocks, crypto, and most importantly, what's on your mind. So if you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show, looking at technical analysis, looking at the financials for the company. Whatever's on your mind, that's what I want to talk about. Now, I do have a bunch to talk about today, especially Palantir. I've got a lot to say about Palantir today. I've got quite a few thoughts on PayPal as well. And several other stocks reported their earnings today, so we'll go over those as well. But remember, leave your question, ticker symbol in the comments, and I will gladly stop and go over it. So welcome. Yes, is it now? Okay, now I'll start buying Tesla again. Yeah, it had a big drop today. Tesla. Yeah, I've got a few things to say about Tesla as well. That's Bitcoin there on the screen, but Tesla, TSLA is the ticker symbol for Tesla. Pull that stock chart up. They were down about 12%, 11% or so today, 11.99% during hours, and they're up 0.2% in after hours. So there's some buying the dip here on the 21-day moving average. It seems to be a bit of a buy the dip opportunity right there. And that puts it, the 21-day moving average is sitting right about $1,014.71. And Tesla is almost a little over $10 above that at $1,026.31 right now, this moment. So yes, there is some buying the dip happening here on Tesla. Now, this pullback for Tesla, quite frankly, it's not surprising. Investors are concerned, worried, and don't understand what could be happening. I include myself in that category. I have no idea if the stock's going to fall another 10% tomorrow. I just don't know, but it is a good sign to see it support here right at the 21-day simple moving average. So that is a bit of a more positive sign, a more positive development for the stock, since it did fall so hard today. But another thing to point out, though, and you see it all the time, when a stock runs up really fast, it tends to pull back really fast as well. So whether or not Elon comes out and says, I'm going to sell 10% of my stake in Tesla, the stock was due for a pullback. So anyways, that's Tesla. Yeah, it seems to be a buy the dip opportunity here, but I'm not sure if it is the floor or not. There is a price resistance, but it's all the way down here at $886. I'm not sure if it's going to fall that far or not. And its 50-day moving average right now is sitting at $863.16. So just a couple of price points there to keep in mind if the pullback does continue tomorrow. Those are two areas that I would watch really closely for a bigger bounce or buy the dip opportunity. So the markets today, they were in the green, but they were not at their record highs. There was a lot of red in the market this morning, but things did kind of pull back, or reverse that. People were buying the dip to reverse the pullback that we saw the beginning of this morning, and things kind of settled down this afternoon. But stocks did slip from their record high levels today, as I think investors, or more likely traders in the market, they digest the latest inflation updates, ending the recent rally of 8 consecutive sessions of new record highs from the S&P 500 and the NASDAQ. In October, producer prices grew 8.6% from a year ago, the most in 11 years, and 0.6% from the previous month, which was in line with estimates, so not too bad. Meanwhile, the data due tomorrow is expected to show U.S. annual consumer inflation hit more than a decade high of 5.8%. 2%. Also, investors try to assess what a possible change in the Fed's leadership would mean for current monetary policy after President Biden did meet with several officials from the Fed, including Jerome Powell. And there was a Fed governor who does seem a bit more dovish on the market, who may end up replacing Powell. We don't know yet. And that is what I believe is providing the uncertainty in the market, which caused a lot of the shakeout that we saw earlier this morning. Let's see. I went from 700 to 580 to 1150 last time. I'm sure I'm early. Yeah, it's okay though. When you are buying the dip when a stock is falling, you dollar cost average, because you never know when the bottom is going to hit. It could hit, right now, or it could pull down another 10% before it hits the bottom. But that's what dollar cost averaging is there for. And that's why we as investors and traders, that's why we use dollar cost averaging, because we cannot time the market perfectly. We don't have a crystal ball to see the future. So dollar cost averaging is our defense and our offense for when buying the dip or buying any stock in general that is headed down. So we can get a better price, right? We can lower our cost basis. On the corporate front, there was some pretty big news about GE. Now, the stock gained almost 3% after the company announced it will split into 3 public companies. That is very interesting to me. GE is a behemoth of a company. Ticker symbol is GE, and I'll put it up here on the screen for us to look at. General Electric Company is the full name there. And you can see they were up 2.65%. They're up just over 0.5% in after hours, $112.04. The company has been range bound and trading flat all of this year. I mean, look at that. If I scrunch this up, this is 2021 on your screen, and it had a nice little rally there at the beginning of the year into March, and then it's just been sideways ever since. So splitting this company up, this massive company, into 3 different segments, it could be a good thing and provide the company with being more flexible to innovate and change with the times, versus being think of a big container ship versus a speedboat out in the ocean. Which one can make the quicker turns? Well, it's the speedboat. The cargo ship, it might lose some of its cargo money while trying to make a tight turn, and it takes a longer time to turn. So if you get rid of some of that extra, I don't know, I don't want to say anything too negative, because people could lose jobs this way. With the company splitting like this, they're liable to downsize with the 3 new different companies. So I do feel sorry for that when people do lose their jobs from companies making changes, but that would be part of the emotion that we have to remove when we are investing and trading. It does sound kind of harsh, but it's the reality of investing and trading in the stock market. Every single company that we invest in, that we trade on, there are real people behind it that are making the companies move. So you do have to think about that when you're, pondering about a company, when you're putting together your investment thesis. It's important to look at founders, especially for a startup. But for a big behemoth like this, you do have to feel sorry for those that will lose their jobs because of the split up. But anyways, I'm kind of going on about that, and I want to leave that alone for now. Meanwhile, the financial stocks were dragged down by lower yields as the 10-year U.S. bond slipped to its lowest level in 7 weeks. Now, I was watching that thing this morning. It dropped pretty hard, but it came back slowly. But yeah, it was down like 5 or 6 basis points earlier this morning. It was pretty neat. But anyways, moving off that, yes, Tesla, it was down over 11%. And there were some weird tweets that were out there. One from Michael Burry, who suggested that Tesla needs to pay his taxes or has this big tax liability. He has a bunch of debt that he needs to pay. I don't know what Michael Burry was thinking about. But Michael Burry also said that the stock market right now, he compared it to the Dutch tulip bubble of 1636. I don't know if we're in a bubble like that, but we are extended. You know, we've had record high after record high, and the higher, you know, it gets, the more wobbly the legs are underneath it. So a correction, a pullback, it's healthy. It's expected. All right, let's hop over and look at Bitcoin real quick. Yesterday during the live stream there towards the end, Bitcoin and Ethereum were making new record highs. And I was watching it after the live stream as well, and it continued to go up. Now, this is the daily chart for Bitcoin. It has a record high right now of $68,568. It's in a holding pattern right now. It has barely lost any ground today. 0.2%. That's nothing. So it is holding steady right now. And again, like I said yesterday, the day before, I believe this is the next leg up in the bull rally. I think it can get to 75,000. Maybe it can go higher. Of course, if it can, then that's great for investors. Also, Ethereum, ticker symbol ETH on TradingView. It also made record highs yesterday during the live stream. It has a record now of $4,842. That's its new record high. Also for Ethereum, just like Bitcoin, it has been holding pretty steady today. It's down 0.8% right now. So again, it's holding flat. And I think, again, Ethereum is going to run. I don't have a price target for where I think Ethereum is going to go, because I think Ethereum's biggest move is going to come in the first half of 2022 when it makes its update. And it could be in the first quarter of 2022. So that would be January, February, March timeframe. But I think that's going to have the biggest impact on Ethereum. Okay, so we talked about Tesla for a little bit. We talked about Bitcoin and Ethereum, just to give an update. There were some companies, while there was a lot of red today, there were some companies making new record highs. One of the ones that I follow quite frequently and invest in is Tractor Supply, ticker symbol TSCO. They hit new all-time highs today, and you can see this is the daily chart for them. And let me just open this up a little bit more so you can see the full move of 2021. So that over top of my head there, you can hardly see any candles because it dips down into the volume there a bit. Let's see if I can fix that. There we go. All right. So Tractor Supply has been on a nice run this year and last year. Their new record now is $224.83. The company's been moving very good. It ended up, after reaching that new record, it ended up pulling back and down 0.2% on the day. Okay, another company that has been moving today is Best Buy. Think about that. BBY is its ticker symbol. Now, Best Buy was rising to a fresh record high of $133.27. It was up 2.1% today. It's down, it's flat. Let's call it flat in after hours. This is down 5 cents, just a few pennies. But it's at $132.89. And ever since the beginning of August, this thing has been on fire and moving very well. If I measure this bottom candle wick right here on October the 1st to where it is right now, That's a 28.5% move in just over a month's time. That is impressive for Best Buy. And they're about 2 weeks away from their earnings report, so that'll shed a lot of light. Now, this move is really good because Best Buy has been flat all summer, most of the spring. It had a dip back in March, and it had a nice rally out of that dip, but that dip was due to earnings. It wasn't so pretty, even though they did beat. Just wasn't like the expectations should have been, and the guidance was kind of weak on it as well way back then in the spring. But if you've been riding this one, it has been very, very good to you. Another company that has been running, it ran yesterday in the after hours, and that's the Trade Desk, ticker symbol TTD. Now, they had way better than expected earnings report. They were up another 9.4% today. They were up over 30% yesterday in the after hours. And you can see on the chart, this stock has been very choppy. It lost a whole bunch due to earnings back in the spring. But if we measure from this bottom right before earnings all the way to the top of this thing right there, that was a 43% gain in just 3 days. That is incredible. It's hard to find stocks that move that way, but I did mention this in the Catalyst Watch video that comes out every Sunday evening. So we were aware of this and we were watching it really closely. But great earnings for the Trade Desk. Now, another company that reached fresh record highs today was Autozone, ticker symbol AZO. I mean, just think about all the cars, used cars, new cars that were sold last year and the beginning of this year. Those cars all need new lights, new windshield wipers, new windshield wiper fluid, oil changes. They need all of this maintenance. And where do you go to get the supplies? Well, you go to AutoZone. That's why it's been outperforming. It was up 2.5% today. Its new all-time high is $1,868.69. It hit it today. It is still up there. It's almost at that record in after hours. It's about 65 cents away from it. So it could tomorrow, it could run up again and hit a new record high. So watch this one closely for a swing trade. I think that would do pretty well. All right. A company that I want to dig very deep on is Palantir, ticker symbol PLTR. Now, this is a company that I've been investing in for a very long time since it went its DPO, direct public listing. And, if I open this up for you, let's get this right. I want to get 2021 on this map. Okay. 2021, if you look at it, big burst, big move back in January, and then it fell, right? And then it had another rally after the bottom, and then it fell. Another rally, then it fell. Another rally. This stock keeps getting hammered. Why can't it break out? Well, I think one of the reasons why it can't break out is because of the stock-based compensation. Now, that's not a bad thing. People who are working for Palantir, they need to get paid. Right now, they're getting paid with stock-based compensation. So when they get that stock, what do they do with it? Well, they need to feed their family. They need to buy a home. They need to buy a car. They need to maintain their lifestyle. They sell that stock, and that provides selling pressure on the stock, keeping a lid or a cap on how far this stock can move. However, with that being said, I do think the stock-based compensation is starting to ease. When I was digging into their financials, the numbers have gotten a lot better, and not just stock-based compensation. Their what it costs them to make money has also dramatically shifted. Like I've been saying for the past couple of days about Palantir's earnings, I think investors wanted something more. This was the earnings that gave investors something more. I really think the market missed the mark on this one because Palantir was down 9.35% today, and they're down to 0.1% in after hours. Now, let's dig into this. So Palantir, it was sinking like a stone despite beating on revenue in its Q3 while guiding Q4 revenue nicely above estimates. The data analytics software company, shrouded in secrecy due to its ties to the CIA and other U.S. intelligence agencies, is struggling to get back to all-time highs that it reached in February, shortly after going public in October of last year's. Shares currently trade lower by about 45% relative to those all-time highs. I think the selling pressure mainly results from Palantir's valuation. It's about a 30x forward sales. It's not too bad for a tech company, but it is a little on the rich side, which leaves very little room for error. This company has to grow, and it has to grow massively. I mean, like 30, 35, 40%. That's what it needs to do, and that's what it did this quarter. In that context, though, posting EPS that is in line with estimates and revenues growing slightly less than the prior 4 quarters, I don't think was enough for investors. In addition, Palantir guided to a fairly decent drop in adjusted operating margins after Q4. After 4 consecutive quarters of operating margins at or above 30%, Palantir now expects margins of just 22% in Q4. In Q3, EPS fell 50% year over year to 4 cents a share, the same as in Q2 and in Q1. Meanwhile, revenues rose 35.5% year over year in Q3 to $392 million, topping estimates, but quite not living up to its Q2 of 49% growth, or maybe even Q1's 48% growth. Both commercial and government revenue were fairly decent in the quarter, growing 37% and 34% year over year. Over the past year, lingering concerns have shrouded Palantir's ability to continue securing certain U.S. government contracts, especially after U.S. troops exited Afghanistan. Palantir did put some of those concerns to bed by winning a major U.S. Army contract in early October. However, total government revenue growth came in much lighter. The 66% year-over-year growth posted in Q2 and 76% growth in Q1. Now, although this category spans revenue from governments worldwide, it could be weighing on investors' minds today. Now, a bright spot for Palantir's continued additional commercial customers, increasing 46% sequentially in Q3. Furthermore, U.S. commercial revenues leaped 103% year over year, signaling strong interest in Palantir's data analytics service domestically. Although this does lead to some concern that Palantir could be seeing additional hurdles abroad, with many developed countries outside the U.S. taking longer to recover from the pandemic, I do think this is of particular concern. Finally, looking ahead, Palantir expects revenues to jump 29.8% year over year to $418 million in Q4. Although this outlook easily tops estimates, it nonetheless represents a continued slowdown in quarterly revenue growth. The good news is that Palantir reiterated its long-term guidance of at least 30% revenue growth for fiscal year 2021 and for the next 4 years, growing at 30% for the next 4 years. That to me is a great sign for Palantir. Now, the main takeaway is that investors were unimpressed with Palantir's inline Q3 earnings growth and slight revenue upside. It also didn't help that government revenue growth was fairly light relative to Palantir's past couple of quarters. However, I think that there are still catalysts on the horizon for Palantir. The company's work in mobility industry has helped speed up certain aspects of different companies' supply chains. Palantir also works in the healthcare industry, supporting many different companies, such as the National Health Service and the Department of Veteran Affairs, which could lead to further renewal of contracts after many healthcare companies benefited from the use of Palantir's services during the pandemic. The bottom line, Palantir looks to be an excellent play on the rise in data analytics. However, with a rich valuation, the stock may need or may see additional selling pressure in the short term, and it may be better to wait on a further pullback before entering the stock for a long-term position if you haven't started one already. All right, that's my digging deeper into Palantir and what I think is going on with the company. I think there is good, or it is a good investment, but this would be a long-term horizon investment, 5 years, 10 years, or more. In the short term, there is still a bunch of stock-based compensation that is providing selling pressure, keeping a lid on how fast the stock can grow. All right, what do you think about Palantir? Is it a company you're investing in? Did that make sense to you, what I just said about Palantir and digging a little deeper into their earnings? I love the company. I think it's great, and I do think it has a place in your portfolio, but of course, that's up to you. Let's see here. Grabbing the Palantir dip too. Yep, misunderstood earnings. Yes, reminds me of SoFi last quarter. Very good. And I do have something to say about SoFi too coming up because their earnings are tomorrow. Bank charter could be. That's what I would love to see. But yeah, I do buy the dip on Palantir myself. It's one of my larger positions. Tesla, Palantir are top positions. Disney's a top position, and I do have something to say about Disney too later on. Yeah, and I do have SoFi. They're looking good too. So let me just swing around and do this, and then let's keep moving. Okay, another company that just blew the socks off of everyone yesterday, Roblox. Ticker symbol is RBLX. Now, Roblox is a company, it's a gaming company, but it has a place in the big buzzword of the metaverse, okay? So let me put that ticker symbol in here, RBLX. What do you think about NIO? NIO had earnings today. Now, NIO, I do have a few things planned out on my notes here to talk about NIO. NIO did dip its Q4 revenue guidance. It came in a little bit below estimates, so that'll provide a little bit of pressure on the stock. But I do have something to say about NIO here in just a moment. Let me get through Roblox so I can get these thoughts moving on. But yesterday we looked at this thing, right? It reported it reported its earnings that blew everyone away. The stock ran all the way up here to this green squiggly line that you see here. But then today, it adds another 42%. Another 42%. And it's still green in the after hours, even though it's practically flat. So if we measure from this bottom, right before earnings, all the way up to where it is right now, Roblox, I have to make sure I get that pronunciation right. Roblox, that was a 42.48% move to the upside. This thing is just incredible. Now, the reason it says that it was up 42.2% today is because the majority of that jump came in after hours yesterday, after the company reported its earnings. Now, Roblox, it's having a block party today after the company doubled its total revenue in Q3 and posted another solid quarter of bookings growth. The online virtual world building game, the metaverse, popular amongst kids and teens, faced selling pressure over the past quarter after daily active users, or DAUs, showed only modest 2.6% growth in Q2 to $43.2 million, indicating that Roblox might not be able to prolong the rapid growth it saw during the pandemic as kids began returning to a more normal routine. Furthermore, although August metrics started to show that Roblox was perhaps making a strong comeback with its DAU growth to 48.2 million, concerns still lingered that August could have been a one-off month as the Delta variant was still in full swing. However, with rising DAUs to 9.5% to 47.3 million in Q3, while October, excluding the 3-day platform-wide outage that it had in October, I believe it was October 28th through October 31st, saw an average of 50.5 million DAUs. Investors are taking notice of Roblox's success in achieving continued growth even while the global economy starts to exit the pandemic. Roblox is also continuing to make strides at narrowing its losses. In Q3, Roblox posted a loss of 13 cents per share, coming in much better than the loss of 25 cents per share and 46 cents per share loss in Q2 and Q1. Bookings growth is also staying strong even while lapping pandemic quarters. Growing at 28.5% year over year to $637.8 million. Also, October bookings are estimated to be up about 30 to 34% from October of last year, showing that full return to school this year and the kids' resumption to normal routines have not prevented Roblox from continuing to carry its momentum forward. Strong October bookings also point to another solid quarter to cap off, its fiscal year 2021. Its full year will be amazing. Another standout in the quarter was that hours engaged were higher than throughout even fiscal year 2021 at 11.2 billion, as Q2 and Q1 each saw hours engaged at just 9.7 billion. Also, Q3 hours engaged were up 28% year over year and 200% from 2019. That's before the pandemic even hit. In addition, October hours engaged were up 41% from October 2020, a year ago, despite the 3-day outage during that month, and suggesting that Q4 should be another great quarter of engagement. Overall, by posting tremendous growth across multiple metrics in the quarter, Roblox is proving to be more than just a pandemic play. The company has pivoted towards operating as more than just a video game company through its brand partnerships, such as Vans World, which gives users virtual skateboarding experiences as well as expensive music offerings that span launch parties and listening parties where artists do virtual meet and greets with fans. Again, the metaverse. I think that these offerings differentiate Roblox from other video games and are providing or proving to keep users engaged despite the global economy's return to finding a sense of normalcy, whatever that may be. The bottom line, Roblox is already off to a great start as we head into the colder months, as evidenced by its solid October metrics. As such, Roblox could continue to see an upside, even with the stock climbing back towards all-time highs. Now, that's what I think about Roblox. Now, remember, with the winter months coming up, that means more kids are going to be inside, even though kids have been inside for the past year and a half now, for the most part. That will keep engagement high for Roblox. So I just think this is the beginning for Roblox, and that doesn't even mention the untapped potential that Roblox has for the metaverse. I am a big believer in what the metaverse can do. All right, let's see here. Do you think it's a good moment to invest? What's your thoughts on AMC? Okay, let's talk about that. Let's go with NIO first. Let's pull them up. Ticker symbol is NIO, and then we'll hop over to AMC real quick. Let's see here. NIO is loading. So they were down a bit today. They were in this rising trading pattern right here. They had a very nice channel that they were in. The problem, and this is what I said yesterday, the problem with NIO is they're hanging right around their 200-day moving average. And you can see that this is the yellow line coming across the screen. Now, with them hanging around that 200-day moving average, them popping above it the past 3 days, that was a positive sign, not necessarily bullish yet, but a positive sign. Now today that it's fallen back below, it's showing that NIO is very weak right now. It does not have the momentum that it needs to carry further. Now, that could change, as with all momentum plays, but that's what I'm seeing right now on the stock chart for NIO. It's pretty weak, and with the earnings coming out not being as strong as they could have been, well, that again applies to the downward pressure it saw of nearly 6%. Now, NIO did have its Q3 EPS of a loss of 6 cents, which did beat by 4 cents. Revenue came in at 1.52 billion, and that was a 128% year-over-year growth, and that did beat by 50 million. For the fourth quarter of 2021, the company expects this: deliveries of vehicles to be between 23,500 and 25,500 vehicles. That's what the company thinks. Now, that would represent an increase of approximately 35 to 46% from the same quarter in 2020, and a decrease of about 3.8% to an increase of about 4.3% from the third quarter of 2021. Total revenues could be between 1.45 billion and 1.56 billion versus the 1.75 billion, representing an increase of about 41 to 52% from the same quarter of 2022, and a decrease of approximately 4.4% to an increase of about 3.1% from the third quarter of 2021. So be careful with NIO. It is falling out underneath its 200-day moving average. So it's got guidance that was below estimates, and that's why you're seeing weakness in NIO right now. So overall, I don't know specifically long term how NIO is going to be able to fare. But right now, short term, it has weakness. Guidance for the next quarter was weak. They didn't beat by that much for this quarter. So that's why you're seeing selling. So it was down 5.9% today, down another 1.2% in after hours. Right now, it's about to sink under $40 a share again. And I suspect that it's going to do one of two things. It's either going to come down to its 21-day moving average, which it's really just pennies away from being at that, or it's going to come all the way down to its 50-day moving average, which is about $38.13. You could find support at one of those two areas for NIO, but it is looking weak right now, and it is falling. Now, it could represent a buy the dip opportunity if it fell below $40 a share. But if we look at the full year for NIO, if we pull this up, tighten this chart up some, so we get all of 2021. If we look at that, take out the beginning of the year. This big high back in January and a little bit of February, if we take that away, so I'll stretch the chart back out. Look at this. The stock has been range bound. It could get to a high of $55, but that's an anomaly. Really, the high for this range is about $45, while the low for it is about $35. So it's sitting between $35 and $45 all year long. So that's not showing very good signs of growth for the company. And if we look here on the right side of your screen, you can see year to date, NIO is down 16% over the past 1 year. If you bought this 1 year ago and you held this stock through ups and downs, you would be at a loss of 2.1%. That does not look good for the company. Now, that's just my thoughts on NIO, on their current earnings and their current guidance, and of course, the technical picture shaping up for NIO. Let me know what you think about NIO. Do you think that sounds good? Do you think that could be correct? Yes, I'm in NIO too. And your thoughts on it? It was insane day for me. Okay, I think I will sell NIO tomorrow, take the loss, and invest in another stock. That's it. Okay. Yeah, sometimes that's the best thing you can do. You don't want to be in a stock that's going nowhere. I mean, just look at some of the big mega caps. I mean, look at Google and how well it's been doing. Even Facebook has been doing pretty well. Okay, what was the next ticker here that we're going to look at? Is that AMC there? Yeah. Okay. So AMC was the next one on the list. So let me pull up AMC. We talked about AMC a bit yesterday when their earnings came out. Ticker symbol AMC. Let the chart load there. All right. So here's the chart for AMC. Now, since it is AMC, GameStop, AMC, sometimes they don't move in rational ways. But you can see this wedge that the stock has been forming since June, since that last run up in June. Now, it did just recently break out of that, and you can see that right here. And let me measure that right quick. If we go from the bottom of this to the top of the breakout, right there, that was a 13.78% move to the upside, but it has since fallen. Now, if we look here, its earnings, I mean, they were almost flat. They came in at, well, it'll be easier to look here. Their earnings came in almost flat. They reported a loss of 44 cents a share. they had an estimate of 53 cents loss. So they did a bit better. Now, one thing that I think is in AMC's favor, and I mentioned this yesterday and in the Catalyst Watch video on Sunday evenings, that the box office success that we've seen from a variety of movies, that's a good sign for AMC. It also provides better financial footing for the company. And of course, since that's happening, it can provide better revenue for the company. And just look, the latest Marvel movie, I think it made 71 or 74 at the box office. Still a far cry and a far ways away from the hundreds of millions that it could have made if we weren't in the situation we are with the pandemic. But it is providing better footing for AMC here. Now, it had revenue of 755 million, which was just above estimates by about 47 million. So the company is getting into better financial shape. I see a comment there, fake breakout, it seems. Yes and no. It could have been, but it was a breakout nonetheless. So when I see this, I think, okay, we had our breakout to the upside. Now we've got our pullback, and now the pattern will start all over again. It's time to look for a new pattern. Even if it would have broken, down here to the downside, then I could say, well, the pattern is broke, so now we need to look for the next technical structure that the stock is building. So yeah, you could see it like that. I could totally get your point, a fake breakout. But the earnings were pretty good. I think this is people, quite frankly, because AMC doesn't move rationally. I think there were people left holding the bag up here and up here, and they wanted to get out. And what is a better time? I mean, look right here. If we draw a straight line across right here, just think of the people that were trapped holding the bag. Oh, let's get this thing straight. There we go. Just think about the people holding the bag up here, right? Up here. They wanted to get out. And this rally, it just wasn't enough for them. So they get a couple extra percentage points by selling out here. That's why I think we had that sell-off back down to its 21-day moving average, is because people were trapped and they wanted to get out. They saw this rise as a sign. That's my thoughts on what I think was happening there. Let me know what you think. I definitely want to hear your thoughts on it too. Okay, so that's AMC. I think AMC moving forward, it's getting on better footing financially, and movie theaters are just going to continue to open up. Now, this whole deal with Disney Plus and IMAX coming to Disney Plus, that could steal a little thunder away from cinemas and AMC specifically. So we'll have to keep our eye out for Disney Plus Day, which is coming up on Friday. All right, what was the next ticker that we wanted to look at here? I'm in NIO 2, got NIO. Okay, VUZI. VUZI. Let's take a look at that next. All right, remember, if you have a question, just leave the ticker symbol and your question in the comments, and I am glad to go over it. All right, VUZI. Okay, let's see here. Has missed on the past couple of earnings, but just barely missed this last one. All right, let me just look down here real quick. Okay, so supplier of smart glasses, augmented reality technology products for consumer and enterprise markets. Yeah, that's pretty cool. So this is a company, personal display, wearable computer devices that offer users portable viewing experiences. Oh, this sounds wonderful for the metaverse. mobility solutions, wearable displays, augmented reality. It holds 179 patents and patents pending and numerous IP license in the video eyewear field. Oh, that sounds pretty cool. All right, so let's take a look at this. Year to date, they're up 51%, but looking at the chart, you wouldn't think that, but this is just May. So this is all of 2021. If we back up here and look at this company, look at the history here. This company had a big run up December of 2020. It shot up. 2021, it was mainly flat. Before that, it was mainly flat. Look at that. So it had a big run here. So let's go in now and see what we can find. All right, see this yellow line? That's the 200-day moving average. Excuse me for just a quick moment. That's the 200-day moving average. Usually when a stock is trading below that, that is a weak signal there. It's negative. But now recently here, there's been some momentum much higher than it has been throughout August, September, and October. And it's gone above the 21-day and the 50-day moving average. Seems to be finding a little bit of support right now around $12.05. Let's see, the last earnings just barely missed on EPS. Oh, wow, that's, yeah. It reported a loss of 13 cents per share, estimated at 13 cents per share. So we have to go to the 100th place to find its loss. Revenue of $3 million, estimated revenue of $3.7 million. So that was a loss of 20% or a miss there. Okay, let's open up these financials here and take a peek. Let's go to quarterly and let's see. All right, so over the past quarters here, the top right box here, this is showing you the income statement. The yellow line is the profit margin. So Q4 of 2020, it had a profit margin and a loss of 84%. And then the profit margin has been falling. Net income has also been falling. It went from 3.5 million all the way down to a loss of 8.7 million. Revenue was 4.2 million and then down 3.9 million and then down more to 2.9 million. So that does not look healthy as a company. Okay, let's look over here. The balance sheet, which is the box. My head's kind of covering that one. Let's see. Debt to asset ratio, 12%, 7.9%, 2%. 2%. So that actually looks good on their balance sheet. They're getting more cash and assets on their balance sheet. That's good. It's just their revenue and profit margin has not been doing very well. Now, we can see here from Q4 2020 to Q1 2021, they picked up a lot of financing. $103 million in financing in Q1 of 2021. And then that went back down in Q2 21. So I don't know what did they purchase something? That would be a question that I would have, because they did some big financing there. Let's see here. So off of their recent quarter, continued smart glasses growth in Q3. That's good. More smart glass orders. Smart glass order. Forms of partnership. provides its see that this is where you would see a big growth right here. This is where I think smart glasses are going to have one of the biggest, outside of gaming, one of the biggest positives, and that's the healthcare sector. So just imagine a doctor wearing smart glasses, and instead of having to turn their head left and right to look at monitors or this or that, it's just right there in front of them. They can just, move their eye just a little fraction, a little millimeter over, and then they can see your vital signs and, other important information. I mean, that's just going to provide so much additional safety and care for patients in the healthcare sector. I really think that's where smart glasses are going to find a big net positive for them. And of course, gaming will be one of the biggest ones, but healthcare, I think, will be right up there with it. So they're partnering with software company Ambify to provide smart glasses to healthcare professionals, which makes augmented reality devices. Yeah, so that is a really big deal. And if they could get more of those, that would be awesome. Now, that report came out on October 1st, and there wasn't much of a move when that news came out, because right here is October 1st. That did kind of stop the stock from falling. I think it's an interesting company to keep an eye on. There's really not much of a pattern right here that I can see. I mean, it's in a downtrend, but it's recently kind of turned that around. It could be range bound between its moving averages. If I try to find some sort of trend on here, some sort of something that's happening, I just think it's a really speculative play, and it's definitely reversed its downtrend. Let me put that there. Okay, so yeah, it has reversed that downtrend. Let's see here. Let's just give me one quick second. I'm just looking around. See, here's what I'm thinking is going to happen. The company, unless it gets some radical type of news, its 200-day moving average is about right there on that line. And then if I move this over to about where its 50-day moving average is, it's about right there. So this company, it could get trapped in consolidating between those two lines. That's what I'm seeing right now for it. I mean, it had a beautiful move today, and then let's see, 1, 2, 3, 4, 5, 6, about 7 days ago, it had another great move. But yeah, it's probably going to chill a little bit and maybe have a bit of a pullback. So that's what I'm thinking here. This is VUZI. All right, what was the next company on here to look at here? NIO, fake out, breakout. Okay. All right, well, if you do have questions, make sure to ask them. I'll try to, I don't want to miss your comment, so just go ahead and ask if you do. Otherwise, let's keep moving. Let's keep moving on what's happening here. Coinbase stock, it dropped. Let's talk about them real quick because they had their earnings. Ticker symbol is COIN, COIN. Let that load here so we can see it on the chart. All right. Okay, so there we go. Coinbase has been moving in a really nice direction all of October, and it's almost like it moves with Bitcoin in a way. Of course, it does have earnings that it comes out with. Bitcoin does not. Now, we can see here on the chart, that they reported an EPS of $1.62, where the estimate was $1.82. So they missed that by about 10%. And then revenue came in at $1.3 billion when revenue was estimated at $1.6 billion. So they missed that by over $302 million, or an 18% miss on revenue. Now, I thought that back here, when it reported its first quarterly earnings for being a publicly traded company, I thought the market missed this, not necessarily Coinbase. I think the market was trying to figure out, how do we value a company like this? But I think it's starting to get more in line. And it's been on a very nice run. It is extended, though, so a pullback would not surprise me. Just look at Tesla and how it's been reacting. But it was flat today because it was waiting for earnings that came out after hours. And it's down 10% right now. It was down as much as, I believe, 14% when earnings were released. But here's what it says for earnings for Coinbase today. The company expects the number of retail monthly transacting users to increase in Q4 from Q3, because remember, Q3 is going to be reporting on the last 3 months, right? So we've got summer in there, September in there, and so trading was low. I mean, look at their stock. And if we look at Bitcoin, BTC USD in trading view, and we go look at how it was doing in the July-August time frame, that's when it was at its bottom right here. So there wasn't much trading happening. For Coinbase to be successful, it needs trading. It needs volatility in the crypto markets. The more volatile it is, the better off it is. For Coinbase, that is. Now, volatility for crypto holders, I mean, I guess we're used to that, but we don't like that either. So going back to Coinbase, they expect it to rise, and I would too, because crypto is picking up again. So there's a lot of people buying into crypto right now. But their Q3 revenue falls short. We already looked at that. Reflecting reduced activity in the cryptocurrency market. Yes, and that's what we just talked about. Coinbase said, as our year-to-date result have clearly demonstrated, our business is volatile. Yes, it is. Let's see what else. They also said, while we entered Q3 with soft crypto market conditions driven by low volatility and declining crypto asset prices, market conditions improved meaningfully later in the year, which have continued to see into early Q4. I believe it'll continue for the rest of the year. The next quarter earnings for Coinbase, I think, are going to be pretty explosive, like they were back at the beginning of the year. Now, for October, the retail MTU was about 11.7 million, and totaling trading volume of $186 billion in crypto traded. That's crazy. For 2021, the company forecasts a range of average retail MTUs of $8 to $8.5 million. It anticipates average net transaction revenue per user will be in the high $50 per month for 2021. And that's, as an investor in Coinbase, that's what you want to see. You want to see more people spending more money on your platform. So right now, what they're looking for is about, they say high 50s. So that could be $55 to $59 per user per month for Coinbase right now. Let's see what else did they have to say here. Coinbase sees 2021 transaction expenses in the mid-teens and sales and marketing expenses about 10%. So that's what they see expense-wise there. They see 2021 technology and development, G&A expenses, excluding stock-based compensation, at about $1.4 billion. So that's a big chunk of their earnings there that gets taken out. Q3 net revenue of 1.24 billion, missing the 1.58 billion estimates. Let's see here. What else do they have to say? Q3 MTUs 7.4 million, slips from 8.8 million in Q2 2021. Trading volume of 327 billion falls from 462 billion in Q2. So Coinbase was making money hand over fist back at the beginning of the year when there was a lot of volatility in the crypto market. Summertime came, we had a lull in trading of crypto, but now trading has picked back up. So next quarter will be a blowout quarter, I would say, for Coinbase. All right, so that's it for their earnings right there. The stock's down about 10% right now, so it has come back from its low. So that's a good sign. Okay, let's see here. Looking at the chart, quite frankly, there's not much of a pattern or a prediction that could be made with Coinbase right now. If we look at this run up right here, this looks very orderly, right? And if I clone this and put this up here for resistance, you'll see a very defined trading channel right there. Now, that began October 20th and has lasted now. If we look at the candlestick, right, the wick does not come down to touch this support, and it has pulled back up. That's a good sign. Now, guidance for them was really good. While the earnings for this quarter were not that great, they're guiding that next quarter will be awesome. So, as the stock fell because of that, there was a lot of buy the dip, and that helped to support the stock. And that's why it's not down 14, 15% anymore. It's only down about 10%. So this is really good. Now, tomorrow, what we could see is another pullback because it is getting extended up here for this range. Now, the stock right now is right here. And if I put a little circle, little line right here, this is where the stock is at right now. Okay. All right. So this is where the stock is at right now. So tomorrow, it could go up a little bit or it could come down a little bit. Right now, it's moving in the up direction, right? And the range is all the way up here, which is about $375. That would be resistance right now for Coinbase. And then if we come over a day, we've got support around 350. So there's a $25 dollar difference between the tops and bottoms of this support and resistance for Coinbase right now, that it could swing in either direction. So investors are either going to come into this thinking, well, you know, next quarter is going to be really good, and this could swing up and then tap this resistance up here at 375. Or investors could come in and say, well, we've had a nice run. I'm going to take some profits and then wait for it to pull back to get back into it. So those are your options for this, but it's only a $25 swing from top to bottom. I know that's not very much, but the thing is extended. If you look, this is its 21-day moving average, and that's at $315. The stock is at $320, so that's a $315 and $320, $5. Getting lost in my brain there for a moment. It's a $5 difference. The 50-day moving average is down here at 273. It's not going to go that low. Definitely not. I think it'll stay within this range, and it will continue up and to the right as it moves into its next quarter. That's what I think. As long as crypto doesn't crash. If crypto crashes, which I highly, highly doubt that it will, then Coinbase should do just fine. So that's my thoughts there on Coinbase. Just real quick, I haven't dug into the earnings yet because they just came out this afternoon, but I'll dive into them a little bit this evening and talk about them. Okay. I did want to talk about SoFi. I did want to talk about Disney, but I want to get to your questions. So let's go over here and let's see here. What do you think about Disney, Microsoft, and Facebook? Okay, we can look at those. Let's start with Disney, because I think they're the most relative, because they've got a lot of magic happening right now. So ticker symbol is DIS. I do hold Disney, just so you are aware. So we'll look at this. Don't forget that SoFi and Open Door both have earnings tomorrow. I am expecting SoFi, or I'm hoping that SoFi does mention a bank charter that would send the stock to the moon faster than you could believe. And Open Door, I think Open Door is going to do better than most expect, especially with their iBuying program. I think they're handling it very well, where Zillow did not. All right, so here's Disney. Let's see, I just want to read this one quick comment. Bought NIO at the close. I expect some volatility and a green end of the week. All right, well, good job. Good job. All right, we talked about NIO a little bit earlier. I do think the company is showing a little bit of weakness right now. The stock's showing a little bit of weakness. I think buying the dip would be under $40 for me personally. Hopefully you could get some under 40 as well. Okay, Disney has been trading sideways for a while. Now, there's one part of my investment thesis for Disney is going back in time a little bit. And I talked about this in the live stream a couple days ago, I believe. But this circle I drew here, this was Disney's top December of 2019, before the pandemic, right? Before Disney Plus, or just as Disney Plus was launching. Right here, 2019, this was their high. And if I measured up to their all-time high, or where they were right now, we were looking at about a 300. Hold on, let me go over here to remember. I don't think Disney has been fully valued yet. And if we go and, what am I typing in here? If we go and look at Netflix, right? I want to look at right now, Netflix is at $290 billion market cap, right? So let's think about Disney Plus. Can Disney Plus get to the size of Netflix? Maybe over time. But what about a shorter time frame? Next 5 years, let's say. No? Okay. Can Disney get to a third of the size of Netflix in the next 5 years? Maybe it could. A third of the size? That's possible. So then let's take $100 billion from Netflix market cap. All right. We're just going to call it a $300 billion market cap for Netflix. We're going to take a third of that. That's $100 billion. We go back over to Disney, right? Now, Disney is not operating at full steam. Their parks are not operating at full capacity. Their movies are not bringing in full capacity. They are not operating at full capacity. So if we take this 2019 high before the pandemic, right? And then we add another $100 billion to their market cap over here, then what we're looking at for Disney, instead of Disney being here at a $318 billion market cap, we're looking at a $450 billion market cap for Disney, because we have to go back to when they were operating at full capacity. All their parks were open. The movie theaters were packed. They were bringing in tons of revenue from all of their movies, their Marvel movies, Star Wars, you name it, right? And now we have to add full capacity, and we have to add Disney Plus on top of that. And if we think Disney Plus can get to a third of the value of Netflix, or a third of the size, then we should add $100 billion onto Disney because of Disney Plus. So that's part of my investment thesis for Disney, and why I believe Disney is not at its peak yet, and it still has a long way to go. I think the stock can add another $100, but I'm not looking short term for that $100 gain. I'm looking over the next 5 to 10 years for a gain like that. But I think it's there. They just need to get to full capacity. Now, Disney earnings, their EPS, or the estimated EPS for their earnings coming up, let's just look at it right here because it happens tomorrow. They have an estimated EPS of 52 cents and revenue of $18.8 billion. By far, the greatest growth catalyst for Disney has been its streaming service. The biggest of those from the growth prospect has been Disney Plus, because remember, there's ESPN, there's Hulu, all right? And there's Star Brands for South America. So Disney Plus is the biggest grower in their streaming bundle. Growth should continue for at least a quarter, but it unfortunately should not be anywhere near as strong as the company saw in the third quarter. We know this because Disney's CEO has said publicly that that is so, that they're going to see softer growth numbers this quarter than last quarter. So investors are kind of preparing for that, and that's why the stock is down a bit today. 1% during the day, 0.1% in the after hours. Disney for the week too, all right? On Friday, now this is important. On Friday, Disney hosts its first Disney Plus Day to preview new content releases across the Disney, Pixar, Marvel, Star Wars, Nat Geo, and Star Brands. Disney is also making some NFT drops as part of the showcasing of its streaming context. Bank of America thinks the event could be one of the biggest catalysts of Q4 in attracting new buyers to the stock. Last year, shares of Disney jumped more than 12% when the streaming business was highlighted during the company's investor day. I'm a big fan of holding Disney for the long term, and I think big things are going to happen for Disney tomorrow and on Friday. Tomorrow with earnings, and Friday with Disney Plus Day. Now, tomorrow there could be one hiccup, and that is with the user growth for their streaming platforms. Remember, like I just said, the CEO has already said it's going to be softer than it was in the previous quarter. So there's still going to be user growth. It's just not going to be as fast, or as fast as it was in the previous quarter. Okay, you also asked about Microsoft and Facebook. One more thing on Disney. This is an untapped potential for any company looking to work in the metaverse. Disney is working to build out a theme park metaverse that you can go visit virtually. That is another layer of money that Disney can continue to bring in, and it'll be a big revenue stream. But that's something you're looking years in the distance for that. For Microsoft and for Facebook, the same thing is occurring. Facebook is already transitioning by calling itself Meta Platforms and changing its brand over to more of a metaverse style company. It's going to do a lot to build out its own corner of the metaverse. Microsoft is working to build out the metaverse for companies. So all three of these companies that you named, Disney, Microsoft, Facebook, all three of them are heavily involved in the metaverse. I know that's a buzzword that everyone's talking about, but they're putting a bunch of money towards it. Now, here's Facebook. Facebook has been falling for a while now. It was in a very beautiful uptrend. It had a nice trading channel, but we could have seen the reversal. The only problem with Facebook's reversal is if I scroll in here on the daily chart and look right here, the red candle from yesterday, it hit its 50-day moving average and it was rejected. So over the short term, Facebook has got, or Meta Platforms is showing signs of weakness in the stock because it did not have enough momentum to push above the 50-day moving average. And that's a psychological block that a lot of investors have. They see the stock running up to that and they're like, oh, sell, 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 because it reached its 50-day moving average. Well, we got to take emotion out of it. But that's why technical analysis works, because of investors thinking that way. So this is a sign of weakness, that it doesn't have the momentum to push above that. And if we want to check that, we can go to the volume, right? So where's the dip? The dip happened right here on October 27th. And if we go to this volume, right, and then we measure, or we look, we put a trend line on here to where volume is, you can see as the stock was rising, as it was gaining a little bit day after day, momentum was going down. Volume was going down. So when it hit the 50-day moving average, it didn't have enough momentum to push above it. Now, on the flip side of that, we can also see that the relative strength index, it's starting to roll over. It was in an uptrend until about this point right here, and it's now starting to roll over. And this takes in a combination of momentum. It takes in some combinations of volume and the spread on the put and call ratio. So right now, Facebook short-term weakness. You need to watch the 50-day moving average. Now, as it comes down to its 21-day moving average, if it decides to go there, that's where I would look for support, $330. That's where I would look for support. If it does fall below that, we'd have to watch the 200-day moving average for support, or $315. Now, if momentum can start building back up, if this volume can start building back up in reverse, then we might have a chance of breaking above that 50-day moving average. But until then, it's not going to do it. It's just not. Now, long term, I think it's a good investment. I think Facebook will be able to turn things around. New branding, you know, you can't always trust what the media says. So a lot of the media says the new branding's not working. Well, I think it is. And I think once Facebook starts to move beyond and starts releasing these new metaverse projects that they're talking about and turn them into products that people can start using, people will start using it and just forget about some of the past turbulence that Facebook has been under. But short term, I see weakness in the stock. Long term, I do think it's a winner. I do think your portfolio. They should be pillars in your portfolio. You should build out positions of them for them. Buy on weakness, okay? Don't buy when it's up tapping its 50-day moving average. Wait for it to fall, then do your buying. All right, so let's look at Microsoft right quick. Microsoft is doing a really good job, but being at all-time highs can give you wobbly legs. All right, MSFT. I'd forgotten that for a moment. Okay, Microsoft. You can see it's extended. Look at this. Let me move some of these, clean this chart up a little bit. Okay. All right, Microsoft. It was down a little bit today, but not much. I mean, it was pretty much flat for the day. Now, it's up here. It's got this all-time high of $338 right here. What's the market cap right now? $2.52 trillion. I don't see Microsoft coming down anytime soon unless there's market volatility. I think Microsoft, it's a solid company. Microsoft makes money. Microsoft should be a pillar in your portfolio. I really do believe that. If I try to extend this line up here, right, and then I'm going to clone this line. Let's clone it, and we're going to move it up. You'll see how this thing is becoming overextended up here. I think what Microsoft needs to do is it needs to consolidate for a little while because it's so overextended. If you measure this from its 21-day moving average, which is sitting at right about $319, up to where it's at right now, that's about a 5% difference. So when a company gets extended like this, when a stock gets extended like this, that's, of course, you're going to hit all-time highs, but this isn't where you want to be buying in, right? You don't want to be buying in at all-time highs. Now, the phrase goes, momentum is your friend. But don't forget the ending of that. Momentum is your friend until it's not. And right now, I think we're in that it's not phase for Microsoft, where it could pull back or it could consolidate. I don't think it's going to keep marching higher. I think it's gotten everything that it needs to move in its favor, to have this beautiful up and to the right on the chart, but it's a little overextended for my taste right now. I do believe that it could come back down a little bit, have a correction, a pullback, or trade sideways for a while. So that's what I think Microsoft is doing. All right, what other questions do you have? Any other questions? If not, I'm going to wrap this stream up here because we've been going now for about an hour and 30 minutes. Just remember tomorrow, SoFi has earnings tomorrow, and their earnings, if they mention that their bank charter has been approved, that stock is going to have a blow off, and it is going to go up fast and furious if it mentions the bank charter. I don't know if it will. I'm hoping it does. Other companies, other fintechs that have been in this situation where they're waiting for approval from or to get a bank charter, once they got that bank charter and they made the announcement, the stocks have gone up fast and hard. So watch news on SoFi really closely, because that bank charter news, it's going to be a fundamental change in the stock. Okay. And of course, Disney's earnings are tomorrow, so we've got that. So it's also, the biggest thing. I don't want to bury the lead. Tomorrow is a huge day for electric truck manufacturer Rivian. That's right, Rivian Automotive, ticker symbol RIVN. I don't even think it's in Trading View yet. RIV. Oh, gotta get on the right screen here. Okay, RIVN. There it is. It's on the chart. Look at that. Oh, this is cool. All right. Of course, it's a blank chart because there's nothing there yet. But they have their place marker, RIVN, Rivian Automotive. There is a ton of hype for Rivian. Their IPO is tomorrow, okay? It's IPO day for Rivian. Everyone is excited. This is going to be a windfall for Amazon and Ford and other people who have invested in Rivian. It's going to be a huge IPO. They are looking for a valuation that could reach 65 or maybe even $75 billion. Their shares are coming in between $72 and $74 a share, and I think that is on the low side. It might get up to $80, or at least come in on the high side of that for Rivian. Now, Rivian is offering 135 million shares in the IPO, which means if it were to IPO at $75, that would bring in $10.1 billion to help fund the company. Stronger than anticipated pricing would also raise the market cap of Rivian to about $70 billion. Rivian Automotive, and the ticker symbol is now up. It's now live. RIVN is expected to price its IPO tonight and officially go public tomorrow. So everybody who has been working at Team Rivian, congratulations. I am so happy for you. I love the product. I think it's a great product. The trucking market the pickup truck market in the US is huge, and it's going to be a big deal for Rivian being the first mover in the pickup truck space, beating Ford, beating GM, even beating Tesla to have the first production pickup truck, electric vehicle pickup truck that I may add, on the market. So it's big news for Rivian. I know there's a lot of hype surrounding it, and we'll be watching it closely tomorrow as it IPOs. Tomorrow on the live stream, we'll talk all about Rivian and their IPO and how their day went. So I hope you guys are excited for it. Let me know, are you going to go for Rivian's IPO, or sit on the sidelines and wait and see if the hype is just too much and overblown? All right, one last real quick request here before I close the stream down. We got FBRX, so let me plug that in here right quick. FBRX, a bioscience company, 335. Ooh, they took a fall last quarter. They have earnings in 6 days. They are 50-50 on earnings. They missed their last earnings. Then they beat the two before that. and then they missed the fourth one out. Let's see, over the past several years, profit margin was way down in 2017, but it has come up to 0. Has not been performing well this year. It is down 90.8% year to date. Over the past 1 year, the past 365 days, it is down 90.2%. The past 6 months, it's down 89%. The past 3 months, 87%. But the past 1 month, it is up 23%. Is that a turnaround for the company? I don't know. I mean, it's sitting down here with a neutral rating on it right now. The stock was up 1.2% today. It's down 1/3% in after hours. Let's see what type of services it's in here. Let's see. Clinical stage biopharmaceutical company focused on dermatology. All right, so skin cancers and stuff. The firm's lead products include FB401, which is a live biotherapeutic for the treatment of inflammatory skin disease. Okay. All right. Atopic dermatitis. Got it. All right. Where 2017 is when the company was founded in California. All right. 6 days away from earnings. Earnings look like this. Estimated EPS, a loss of 35 cents on no revenue. So this company does not bring in any revenue yet. Let's look at the financials, if they have any. Let's look at the financials right quick, and then I'll look at the stock chart. So let's go to a quarterly view so we get most recent. So there is no income, 0 revenue for the past 4 quarters, and it looks like their burn rate is about $5 million. Let's call this about a $4.9 billion burn rate on its cash for the past 4 quarters. And if I look down here at their balance sheet, their debt to asset is 10%, 3%, 4%, and 5%. So they're keeping the money burn and assets to liabilities. They're keeping a really good balance of that. A really good balance. So they're managing their money very well. We did have a spike here in Q4 of 2020 of financing of $42.3 million. But again, that was just for 1 quarter. They must have bought something during that quarter. And that is Q4 of 2020. So at the end of last year, they must have bought something. All right, let's go check headlines for anything here. Insider sell. Yeah, that doesn't mean much. Healthcare stock, modest recovery, edging higher. Okay. All right, there's not much news here about it. No, there's not really any news right here about it at all. All right, so let's look at the stock. We'll go in a little bit closer here. Big drop. I mean, this was a $40 a share company, and then it just sank. All right, so let's get a closer look here. I'm going to switch this to a 1-hour chart just because the daily chart it looks like this thing is just flat, not moving. All right. So the month of November, you can see right here. All right, right here about the middle of your screen, this is the 1st of November, and there was a nice green candle here. And this is when the stock broke above its 50-day moving average. So 50-day moving average, it was resistance for the company through October, and that is a very bearish and it's a very weak sign when a company trades under its $50 moving average. Now that it has popped above its 50-day moving average and it's using that as support, you can see it popped above it, stayed above it, came back down. Here it came all the way down to the 50-day moving average, but it bounced right off of that. So this right here in the short term is looking very strong and looking very bullish. Even staying way above its 21-day moving average, dipped below it, but has popped right above it. I don't know. I think this is a bit of a speculative stock here with earnings coming up at a loss of 35 cents a share on no revenue. If they could surprise and actually earn some revenue, that would be very bullish. But I think this is a speculative move going into earnings. Without diving any deeper into the company, let me just do one other quick search over here. See if I can't find any more information. FBRX. All right, it's loading. Let's look here and see. What do we have here? All right. Remember on my Catalyst Watch video that came out this past Sunday, and I talked about Smile Direct Club, ticker symbol SDC. SDC. There we go, Smile Direct Club. And I said, I got a warning, and we should stay away from Smile Direct Club. Look what happened to Smile Direct Club. It was up here. It was in this beautiful pattern, and now it has fallen all the way down here, right? Remember that? I talked about this on the Catalyst Watch video on Sunday. Said stay away, I get a warning. I also said that I got a warning for Lemonade, and if we go look at Lemonade, ticker symbol LMND, and I'm bringing this full circle. You're going to see why in just a moment here. Lemonade dropped 10.7% just today. Lemonade was, let's see here. This is a hour. Let's go to a day chart, one day. Oh, a little harder to see on the one-day chart. All right, let me go back to the 1 hour right quick. I just want to have a visual for you to see. Okay, so right here, Lemonade shot up the beginning of November, and then it fell and then had a bounce. Now, right here before earnings, Lemonade was trading up here at about $71 and some change. It has now fallen. It fell 14.2%. So on the Catalyst Watch video, and it comes out every Sunday evening, it's a very important, I think it's the most important video I do all week. I said Smile Direct Club, stay away, I'm getting a warning. I said Lemonade, stay away from getting a warning. Both of these companies have dropped massively. For ticker symbol FBRX, I am getting the same exact warning. I'm getting a warning that says this is a high risk stock of performing badly. Okay, I would take this as you need to step away. This is not financial advice. This is for entertainment purposes only. But my reading over here is that this stock has got a warning to stay away. Take that as just another data set in your due diligence. even though the company has shown relative strength right here for the past, since March 1st, I mean, November 1st, it has fallen hard. Look at this. Since its last earnings. So yeah, there's my suggestion there. Again, not financial advice, but I got a warning to stay away. All right. That wraps up the live stream, folks. I'll wrap it up here. Thank you guys for the question. I greatly appreciate everything you guys do. And remember, the best way to help make sure these videos continue is the first link in the description below takes you to our Patreon page. Your support means a lot to me. It means a lot. It means that we can continue to do these videos and we can continue to offer you our research, our analysis, and our technical analysis and breakdown of all these stocks that you want us to look at. I would suggest to do that to help us out so we can continue to do this. But I'll wrap the stream up here. Remember, yesterday I released a video about Aurora Innovation. They are a pure play in robo-taxis. It's definitely worth a look. So go check that video out. Go check that video out if you have some time. But until then, I will see you tomorrow at 5 p.m. Eastern for the next After Hours show, where we talk about stocks, crypto, and your requested ticker symbol. Thank you guys so very much for joining me, and I will see you in the next video.